Hey everybody, welcome back. Thank you so much for taking the time to support the channel. My name is Hello Good Trades. You may know me on YouTube as Hello Good Game, playing Magic the Gathering Arena for the last 6 or 7 years now, a long time. Started up the Hello Good Trades channel to recap my day trades. That's in a separate video. And then, it's GameStop life for me for a long time, since 2021, right? So finally, taking the jump to create some GameStop content, which we probably should have done a long time ago. So again, thank you all so much for helping out. The rate of growth on this channel is dwarfing my Magic channel. So again, just you guys are fantastic. Leave a like, drop a comment. Let me know if I can improve in any way throughout this process, right? So just doing daily GameStop videos, daily trade recaps for you here on this channel. And again, of course, we do play Magic on the other. I'll try to link it for you as well if you want to check it out. So what's in today's video, other than, you're rambling, as we always do so well? The topic today is going to be, how does the GameStop warrants differ from the AMC APE dividend that came out some time ago, right? So we're going to go through the differences, the similarities, kind of explore a little bit about that. We also have our options, overview through the day, tracking open interest, seeing where everything goes here, going through our cost to borrow, our IV, a little bit of data that we have access to, as well as our daily technical analysis, going through support and resistance levels. Then we have, some SuperStonk posts to go through. We see an SEC delay on non-event EU knockout certificates happening as well in Germany. And that'll be the second instance of this in a week, which is, maybe a smoking gun, if you will. So discussing that a little bit. And so to kick things off, let's talk about AMC's APE versus GameStop's warrants. So it all boils down to, when leadership decides to look at themselves in the mirror. Do they say, hey, I am a doofus? Or do they say, what can I do for us, right? This is a good example between AMC APE with Adam Aaron at the helm and GameStop's warrant with Ryan at the helm. AMC issued APE at a 1-to-1, at which point it went through a massive sell-off, a 1-to-10 reverse split taking place to get the price back up. And, that's a big part of the seller boxing strategy. You crush it down, reverse split it up, crush it down again, and just rinse and repeat the market cap into oblivion, which is really, really aggressive. And then what they did is they converted the APE back into AMC, which is brutal. So people got absolutely hosed, a super dilution event, and AMC often traded above APE, which added a lot of pressure and arbitrage to it in a negative fashion. Capital raised mainly through issuing equity, messy options adjustments, which again isn't really great for the investor, unlike the warrants, which we'll get to in a second, around the split and convert, right? So the dilution that happens, there's no dibs on it for the shareholders either. That's just hitting the market, versus GameStop, right? So warrants, not shares, no immediate dilution, the right to it if you want later. One warrant per 10 shares, 32 strike, October 2026. That part's not necessarily too important, but dilution is only if they're exercised, and GameStop's going to receive that cash up to 1.9 at 100% exercise. Cleaner mechanics, not hurting the options chain, but actually empowering it, and the shareholders get the choice on the timing here as well, and that's great. So it's not up to someone who ultimately looks to be hurting the company. It's up to a group of people who want the best for the company, which honestly shouldn't even be a thing at all. But we see, a lot of the times, coordinated efforts between company management and short sellers, That's been documented for a while here, for years and years, and what's really decades. So, it's a lot of people get caught up in, oh, it's the same thing, and each company's the same, but it's not just the company. There's a lot more to it, even than just their numbers, the revenue, and what have you, which I guess is important. But what's the leadership like? So a doofus versus a what can I do for us, right? So a little bit of cheese here to start out the video, but we had that comment, right? And it felt like a wholehearted question, right? So I wanted to maybe just answer it really quickly. The biggest part of it was the dilution that was incurred through the APE token wasn't in favor of shareholders and impacted the stock quite negatively. However, I do think the warrants will benefit shareholders and the stock at large, which is great. So just remember that Ryan's equity is tied up. He's not necessarily paying himself a salary, and that's for the entire team, right? They want the best for the company, just the same as we all do. So that's going to kick us off. Let's get looking at our options information now. We see our put call overall on the entire chain at 0.57, trending downwards. On the week, 0.32 with max pain at 24, which I do suspect that we drift towards to end the week. Whether or not we get all the way there is going to be seen. Again, looking at our technical analysis afterwards to kind of confirm that and set some parameters as to where we'd like to see that trend retest take place. For the week, though, we have a couple days left. So what do we see currently? Tracking day by day open interests. If we can see a lot of the open interest on the call chain fade with the price staying, that's going to signify contracts being exercised. Also looking for those, contracts to be rolled out to new strikes, right? So just tracking the daily volume and the open interest on the chain really quickly, not spending too much time on it. So for this Friday, again, max pain 24. We have calls stacked 26, 28, and then puts 24, 25. Our open interests towering 25 to 31, notably at 30, and then those puts 22, 24. Feeling pretty bad about the 30s this week for people, but maybe something crazy happens and we get up. But you see that often that the top end of the chain gets burned. The final strike is so risky to take if you are an options player. Moving on, next Friday, September 26th, max pain 24.5. Our volume, we have call burst 26 to 29, at 27.5, 29. Should be filled in a little bit more, I'd like to see. But it is what it is. And then our open interest, 26, 28.5, then 31, 32 puts 23 all the way up to 24.5, kind of 25 basically anyways as well. And this is, where they'd like to get us, I'm sure, but there's just so much loaded on that front end. And, we've seen these 33s purchased yesterday. They're still there. A lot of 30s being added to this today, and some 28s as well. So I like the 28s helping because, there's a bit of a gap, to get to 30. So we'd like to fill in, from 26 to 30 as well. And then even post 30 is going to be great. So moving on to October 3rd, we see max pain 24. Our volume, a lot of calls 27 to 30, light push 22 to 23. Pronounced call wall at 30 here, right? So that's why we like to see these 28s build up to help us get there so it's not such a gap to get there. Like if it would be to 25 to 30, that's a lot of dead space to flip the hedge, send it back. But if we can kind of help walk it up, that's going to be, or ramp it up, if you will, that's going to be our main objective. So a lot of 30s here today for us. And, the catalyst or flow can sustain. We get over 28, we can aim for 30. Otherwise, it's going to pin our magnet for us, which is brutal. The read on the 26, over 27, and we can target 28, maybe 30. Under 25, we're going to revert to the pin. And then this week, Over 26, dealers are going to be short gamma most likely, which is a runaway to 28, maybe 30. If we lose 25, we're going to get pinned 24, 24.5. Then October 17th, which is the OPEX, right? So calls 27 to 30, light puts 20, 25. Really, here's chilling. Then our open interest, we've got this massive wall at 30, and a lot of support at 25, right? So this is kind of nice on the week, and maybe help us hold 25. And then we've seen like those 28s building on the week earlier, and maybe that can help us finally get to 30 in the next week or two, right? So that would be awesome to see. Yeah, really call heavy here, and the upside is there if we can get it. So volatility and pricing is something that we want to go through as well. I mean, the leaps are here. The 30s are building. I guess we should talk about that. The 25s, it's the same old story. There's nothing really changing here. So 20s put spot today, but I just good luck with that. It's not the time. We just had a major reversal on the 1 day. That coming in a second. But the options are like suppressed, it seems. IV really low, under 50%, 7 percentile rank. So 93% of the time IV is higher than this. So it's not really much cheaper than this typically. I think that's a lot to do with the new options chain coming. We get GME 1 and then GME. Everything before the third will be GME 1, which has the warrants tied into it, which you think, oh, that's great, more deliverables, but the liquidity on that chain is going to get cooked. Everybody's going to go to the new chain, right? So just be aware of that. And what that means when the liquidity is bad on an options chain is the bid and the ask, the spread between the two is going to be a lot wider, right? So it's going to be hard to get a good fill. Now, this is irrelevant if you're exercising and they're in the money, right? And that is ideally what we're doing with those contracts. However, just to be aware of all that. And then, we were talking about what a doofus looks like earlier, and then what someone who says, what can I do for us looks like. Just having some fun here, right? You'll love to see it. So volatility remains suppressed, which I think is, again, due to that options chain. And then I think once that new chain hits on the third, volatility is going to go wild because everybody's going to pile into the new chain. Just my take on it. We talked about the options chain, did a review there. Cost to borrow, it's not skyrocketing yet. We'd like to see it higher. Shares are a little bit lower than they have been in some time. Rebates still there. Maybe this doesn't take place until the third or just moving into it. 11 trading days, I think, until the ex-dividend date. So that's getting closer. And then we also see, I think this is the second post of a forced closeout of a GameStop derivative, which is interesting. Both not in America. I think one was in Korea and this one is in Germany. So that's pretty interesting. EU knockout certificates terminated early. Interesting issue or risk data point. Product specific and not a standalone signal, but what could potentially be a smoking gun. And then we also have the SEC postponing hedge fund disclosure for a year. Private funds, of course, so transparency is delayed for regulators. No impact on our warrants or our DRS or options plan ever, but it basically just hides how cooked they are. But what's the SEC going to do anyways, right? Probably not a lot. So, technical analysis for the day. Now, this is really actually where I do best at. On our 30-minute chart, we have a bearish reversal set, right? We broke down this afternoon. We have a market structure shift and the 21 crossing underneath the 50 exponential on the half hour. Now, this isn't super relevant because of the lower time frame. We get these false rejects or false sets either way, and it's kind of whiplashy, right? And on the smaller time frames, you're going to have that take place, right? And more often, the more zoomed in you go. However, it did happen, so we want to be watching for that now on our 1 hour. So we see We're retesting the 50 on the 1 hour, which if it breaks down, then we're going to the 200, then we're going to the 200, right? But that's okay because we have the bottom band at 24.5. We should hold that, no problem. And on our 1 day, again, we still have the bullish breaker block in play with support as well. So, we've got our 200 moving average, we've got the lower band of the gap, we have the breaker block, and now our other moving averages, the 21 and the 50 on the 1 day, are catching up. And the longer we can stay elevated and maybe just bleed down a little bit, the faster these are going to catch up, right? And this is where we're looking for a trend retest. Because if we go to the 4 hour, it's the same pattern basically that I always look for. Here's our reversal. Here's our key level breakout, right? And then we have our trend retest. Right here is the goodie. So reversal signal, key level breakout, and it does its thing. But you don't want to buy on the rip, right? You want to get in on this trend retest. So just like that, on the 1 day, we're doing the same thing, right? We've got our reversal signal. We have our key level breakout. Now we just want a trend retest, and then we go. So options chain looking good. The ex-dividend date is coming due. There's a lot of hype around that. I'm very interested to see how it plays out. I'll be paying attention as best I can. Of course, if there's anything I've missed, don't hesitate. Let me know in the comments below. The technical analysis today is we didn't really do anything. We didn't do anything yesterday either. We're just consolidating. However, the fact that we are not giving it all back right away is great. And if we can continue just to consolidate, hold these levels, we're going to be good heading into next week. As in-depth as I can get it to go. We are down almost 1% on the day, basically all this afternoon, unfortunately. But, GameStop is so volatile that we could just literally be back at, where we were yesterday, pre-market tomorrow, right? It doesn't take much. There's such bad volume that there's no structure to really trade intraday. What was our average volume today? So 7.78 million today, and our average is 8.59, which is increasing. That volume average is increasing from its lows. So that's not bad, but we still want to be raking 20 million, getting up to 50, and I wish, but 100 million. If I had a wish that could be granted, please and thank you. At which point, we're going to pay more attention. The technical analysis is going to matter a lot more than it does currently. Still getting setups and entry models, but it's based on those larger time frames, and then the intraday is basically almost not even worthy of your time. However, there's 76 days till earnings. Just waiting to see how all of this plays out into next earnings, right? Because obviously we plan for an earnings run-up, even though we didn't get one this time. We would assume that at least we can have an IV run-up with that week or week and a half into the next earnings. So 60 days or something of just chilling. But the dead time through our earnings play isn't necessarily dead time this go around, because we have these other catalysts in play to keep us busy, which is awesome. Aside from that, I don't know. Just have a great day, of course. We've got like 200 subscribers, which is great. I think we need about 1,000 to kick things off, which, I think we should get in no time. If you wanted to help in any way, just let me know what I could improve upon, right? Do you want me to cut out all the rambling? Should they be heavier edited, or do you kind of appreciate it, right? It's more personable, and then you get a better idea of where I'm coming from. So hit the like, leave a comment, subscribe to the channel, but most importantly, have a great day, and I'll see you soon in the next.